So before we get to your questions, as I mentioned off top of the show, if you have any questions, please feel free to put them in the comment box. Before we get to your questions, I want to touch just briefly on oil. A lot of individual investors coming into this year felt that the price of oil stocks would do well. And there were obviously reasons for that. You had OPEC cutting production. Most recently, you had the Saudis cutting 1 million barrels a day of production. Now, the Saudis are only producing about 9 million barrels a day, whereas the US is about 12, 13 million barrels a day. You have the Russians still producing, although the Western world is not really accepting oil from Russia at this time, obviously because of what's going on in Ukraine. So a lot of people felt as though oil was the place to be. And we have a nice chart on the price of oil. We can pull that up and you can see how the price of oil has fared. And if you look at oil stocks in general, they haven't really fared too well either. And so I've added to some of my oil positions, mainly for one reason, and that's for the dividends they provide. A lot of the oil companies, what you should know is that they are profitable, even if oil should drop down to, let's say, $50 a barrel for WTI oil. So some of the US names, Pioneer Natural Resources, Devon Energy, some of the Canadian names, Suncor, CNQ, these are names that continue to make money, even if the price of oil stays at around these levels in that $70 range. And so going forward, I predict, or I believe, the price of oil will kind of be range bound. I think at one point in time, I thought the price of oil might migrate north to about $90 a barrel. We could see that, although we have just started the driving season. I know that the US needs to replenish their oil reserves for the country. They took out some of the oil from their reserves to bring down the price of oil, over the last year. Now they got to replenish those reserves. So that's a need for oil. But make no mistake about it, with more and more electric vehicles, more and more other forms of energy, the idea that China, unfortunately for them, is not firing on all cylinders, that their growth rates have slowed, that the global economy has slowed in general, growth rates around the globe have slowed, is not good for the price of oil. And lastly, a strong US dollar is never a good thing for commodities, and especially oil. So if we were to see US dollar weaken, that probably would be good for oil. But having said that, I think if you're going to own oil in a portfolio, you want to be underweight. You want to own good oil names that pay good dividends. And I think that's what you can sit on as you wait for some growth to come from the oil sector.